The Indian markets have been reasonably range bound for this week. In the context of the global markets, US indices, Dow and S&P have been significantly volatile for this entire week. Dow going by about 400 points and then by 600 points and then rebounding by about 1,000 points. All of this in one entire week. So the US markets have seen the maximum amount of volatility in this week. Compared to that, the Indian markets have been fairly range bound. Nifty has been down by about 1.6% for this week, touching a high about 10,963 odd levels, and the support at about 10,534 odd levels, after closing the week at about 10,779 and closing at about the 200-day moving average. For the entire month, from an expiry to expiry perspective, Nifty has been down by about 0.7%. So this entire month, Nifty has been reasonably range bound with a negative bias and shown a reasonable amount of resilience for this week. However, for this week, all the indices have been trading downwards. Realty has gone down by about 4.2% and auto has gone down by about 3.4%. In terms of technicals, Nifty has formed a long-legged doji for the weekly charts, and there's been a slight bearish candlestick pattern on the daily charts. RSI is trading at about 50 odd levels, while MACD is still trading below the signal line. For the coming week, we do expect volatility to be there with the US markets on account of the US government shutdown. While the trade barriers between US and China are easing out, but the US government shutdown is going to increase the amount of volatility in the coming week. So we would request you to stay range bound, to stay cautious on the Indian markets, and book your profits on every upside. Trade cautiously and be stock specific. There is resistance at about 10,963 odd levels, and the support is about 10,550 odd levels. That's our outlook on the markets for the coming week. In terms of our stock recommendations, we have a buy recommendation on REC Limited. We have a target price about 122 odd levels, with the stop loss at about 106 odd levels, signaling an upside about 5%. The stock has moving strongly on the upside, breaching the 200-day moving average, which was at 113 odd levels, and there has been a reasonable amount of volume growth while moving the stock upwards. So RSI is at about 63 odd levels, and we'll recommend a buy on the stock. In terms of our sell recommendation, we have a sell on Welspun Corporation. We have a target price of about 133 odd levels, with a stop loss at 148 odd levels, signaling a gain of about 4%. The stock is moving, has breached the 200 moving downwards, which was at 140 odd levels, and the stock has gone down with a significant amount of volume. So we would recommend you to do a sell recommendation on the stock. In terms of our third recommendation is again a sell recommendation on DLF. We have a target price of about 170 odd levels, with a stop loss at 186 odd levels, with a gain of about 3%. This stock is again breached the 200-day moving average, which is at 187 odd levels, and the RSI is trading weak down to about 46 odd levels. So that's our recommendation for this week. Thank you.